Pi Network is sitting on a knife's edge, and the next move could either trigger a major breakout or a harsh dump to new lows. This is the most crucial moment Pi holders have faced in weeks. Stay tuned. What if the Pi Network, a cryptocurrency many have been watching in silence, is about to make a major move that could either shock the market with a breakout, or sink deeper into a painful downtrend? Right now, Pi is locked in what technical analysts call a consolidation phase, which, for most casual investors, just looks like a coin going nowhere. But under the surface, something interesting is happening. Certain signals are flashing green, investor behavior is changing, and whispers of a bullish reversal are beginning to spread. But at the same time, broader market conditions are telling a very different story. In the next few minutes, we're diving deep into what's really happening with Pi Network. What the data shows, where investor sentiment is shifting, and most importantly, what's likely to happen next. Stick around, because by the end of this video, you'll understand not just where Pi might be headed, but also why this moment could be the most important turning point the project has seen in months. So, here's the current situation. Pi Network's price has been hovering around 64 cents to 65 cents, not exactly thrilling if you're hoping for quick gains. It's been stuck, caught between the forces of growing investor optimism on one side, and stubborn bearish momentum on the other. This has created a kind of standoff bulls and bears in a quiet tug-of-war, with no clear winner yet. Now, this consolidation phase isn't necessarily a bad thing. In fact, it's often the calm before the storm, the buildup of pressure that can explode into a breakout. But only if certain conditions align. And right now, those conditions are complicated. Let's talk about investor sentiment for a moment. One of the most interesting indicators here is the check in money flow, or CMF. This technical tool measures the amount of capital flowing into and out of an asset. And here's the kicker, the CMF for Pi Network has started to climb back above the zero line. That might sound like a small thing, but it's actually pretty significant. It means that, despite all the sideways movement, money is starting to flow back into Pi. And not just in tiny amounts, enough to shift the sentiment needle in a meaningful way. What this suggests is that some investors, possibly long-term holders or savvy traders, are seeing the current price as a potential bottom. They're buying in quietly, while prices are low, perhaps positioning themselves ahead of a potential move. That's usually a bullish sign. But before anyone starts celebrating, it's important to look at the bigger picture. Because while the CMF is hinting at growing confidence, another major indicator is telling a very different story. And that's the MACD, or Moving Average Convergence Divergence. This tool is used to measure momentum, and more importantly, to catch shifts in momentum before they become obvious on the price chart. And unfortunately, the MACD is still looking bearish for Pi. There are still red bars on the MACD histogram, which means that selling pressure remains active in the market. While the size of those red bars may be shrinking, which could hint at weakening bearish momentum, we haven't yet seen the kind of bullish crossover that would indicate a true reversal. That crossover happens when the MACD line crosses above the signal line, and until we see that happen, there's no technical confirmation of a trend shift. So what does all of this mean in practical terms? It means that Pi Network is currently suspended in a very delicate balance. On one side, we have rising investor interest and early signs of capital inflow. On the other side, the broader momentum remains negative, and price action is stuck in a range. Think of it like a spring being compressed. Something's going to give, but we don't yet know which direction. If the bulls take control, and if Pi Network's price can break above the key resistance level of 71 cents, that would be a game changer. This level isn't just a psychological ceiling, it's also a critical technical level that could trigger a cascade of buying activity. If that happens, we could see Pi move up quickly toward the 78 cents level, potentially even higher if the momentum builds. A breakout above 71 cents would also likely coincide with a bullish MACD crossover, adding fuel to the fire and attracting more traders into the move. But the danger of a downside move is still very real. If Pi fails to hold the current support levels, especially the crucial zones around 61 cents and 57 cents, the price could collapse to 51 cents or lower. That would not only invalidate the current bullish setup but also risk shaking investor confidence in the short term. And in crypto, once confidence is lost, the sell pressure can become relentless. So here's the real question. What should investors and traders be watching for right now? There are three things that matter most. First, price levels. Keep your eyes on that 71 cents resistance and the 57 cents support. These are your lines in the sand. Second, the MACD. If we start to see signs of a bullish crossover, that could be the early warning signal for an incoming rally. Third, volume. If we get a spike in volume alongside a price breakout, that will confirm that the move is real and supported by market conviction. And here's something else to consider: the broader market context. Bitcoin, Ethereum, and the larger altcoin space are also in uncertain territory right now. If the overall market trends lower, Pi Network could struggle to hold even its current position, regardless of its internal signals. But if the market stabilizes or turns bullish, Pi could be in a position to ride that wave, especially with CMF already trending upward. At the end of the day, Pi Network is at a crossroads, a place where indecision rules and volatility lurks just below the surface. The smart play here isn't blind optimism or fear, it's preparation. Know your risk, watch the signals, and be ready to act when the market shows its hand. So what do you think? Is Pi Network preparing for a breakout, or are we looking at another fakeout that leads to more downside? Drop your thoughts in the comments, I'd love to hear your take. If you found this breakdown useful, give this video a thumbs up and consider subscribing for more deep dives into crypto trends and altcoin analysis. We're here every week tracking the signals that matter so you can make smarter moves in the crypto space. Thanks for watching, and as always, stay smart, stay safe, and stay crypto curious. Until next time.